All right, everybody. A very good afternoon to everyone. Welcome to the Forgotten Money YouTube channel, and we will go through some of the week ahead macro events we're gonna have. Probably from 7th of October to 11th of October. But before that, it is very important to go through what we had last week. So that's the point where we're gonna start this video. And after the recap, after the scope of last week, then we're gonna move forward. That what lies ahead of us. Okay, so let's start the video. Let's start the analysis. So if we start from the Sunday, the major data we had from China is manufacturing PMI and services PMIs. So it is just worth noting that on 24th of September, if I'm not wrong, the PBOC announced a raft of policy stimulus targeted at the broader economy, property market, and capital markets. So with that being said, uh, the China A50 just skyrocketed after that stimulus announcement. And with that, the investors, the economists now expecting that the China will do better than it had been doing before that stimulus announcement. Now, if we look at the PMI numbers, we might can see that the number is not showing a good sign from the economy, but as we know that the policy decisions, no matter if it's a fiscal or it's a monetary policy decisions, these decisions are lagging decisions. So they don't like if they announce it today, it's not gonna be like it's gonna get how I can say that it's gonna start improving the economy right away, if I'm not wrong. So it takes around 6 to 8 months to fully price in what the stimulus has to do in the economy. So with that being said, PMI services, manufacturing, non-manufacturing PMIs, we had just better services PMI 49.8. If we go to the time graph here, let me just go for a line here. So as we can see, it's just sitting and ranging between 50.7. I think we had 50.7 last time on March, and after that it's just a nice bounce from 49.1 to 49.6, but it's not that great. So with that, we can see that the stimulus has not got into the economy. It might be in next 2-3 months, but we will see that. We will as we start getting the better data from the China, that can indicate that the stimulus is now showing its effects. If we look at the services 50, it's not expanding, it's not contracting. However, if we go at the time graph, we can see that there is a clear downward slope here. So it from March 2024, 52.7 was the best number we got, and with time being, we have reached now 49.8. Just after that, we got a little bounce to 50. So overall, as we know, China is not doing great right now. So with the stimulus, we hope we will see some good news coming out from China. Now moving forward with Monday, we had German preliminary CPI month on month. It's good data, but it's not worth to trade. The major I think we had a commentary from President Lagarde. Let me see if I have that on my file here. ECB and President Lagarde. So yeah, so I think it's the 30th of 30. So right here. So the remarks made by Lagarde echo her comments at the most recent ECB press conference. So as I mentioned here, it's just not neutral comments. She didn't went away from the commentary she made during ECB press conference. So the comments were pretty much in line with the previous comments she made, so there wasn't anything significant we got out of this commentary from the President Lagarde. Now moving forward with Chicago PMIs, just a bit better than there, but the most important part of was for that day was the Fed chair Powell, and he really surprised the market. Let me just bring that up. His commentary I just luckily had on my hand. So if we look okay, so if we look at the context on that period when he came up and gave his speech, the market was really aggressively pricing in more than 50 basis point cuts for rest of this year, which was, according to me or other economists, that wasn't mandatory. US economy isn't falling off the cliff. Why does it need emergency cuts? So with that, ch- uh, Chair Powell came and really tried to calm the market that, hey, you need to guys need to chill because we are not in a hurry to cut rate quickly. And here is that the comment. Sorry about that. So here, Fed Chair Powell says the Fed is not in a hurry to cut rate quickly, will be guided by data. And he also said that the 50 basis point cut reflects the 50 basis point reflects growing confidence that appropriate policy recalibration can maintain labor market strength and inflation moving towards the goal. Now, the remark says that the broad hawkish reaction was seen in response to Fed Chair Powell's remarks. He noted how the Fed is not in a hurry to cut rate quickly, adding if the economy evolves as expected. And the last comment was that would mean two more cuts this year for a total of 50 basis point, implying 25 basis point cut in November and December as the base case. So that was the base case. We got a 50 basis point cut of it was more than I think it was a 75 basis point cut before the Powell speech, but after his speech, the market just calmed down, and I think price in was less than 75 basis point of cuts. Moving forward with the data, we had a Bank of Japan summary of opinions, nothing something we look to trade on. We had final manufacturing PMIs from China. It's just staying there where it was the last month, so nothing fascinating there. Let's move to the important data. October 1st, Tuesday, we had core CPI and CPI flash estimate from Euro, as expected. It's not something to go for, but as we can see, the inflation estimates is moving in a right direction, but it's just, as we can see, the inflation is close to there where it was in April 2024. 22.6% was in April 2024, and it's just a 0.1% above from that. So we had Tuesday very messy data. Okay, okay, hear me out. I will explain it to you why I said that. Uh, Final manufacturing PMI is 47.3, better than expected. Everyone wants a better data. So the major component is not shown here. Sorry guys, this is from S&P. This is the ISM manufacturing PMI. It came in
Update from the US State
contractionary.
Department, noting the Israel ground operations in
Sorry about
Lebanon
that.
so
So,
far continue to be limited in the US assessment.
ISM manufacturing PMI 47.2. The prices paid came worse than expected, but let me get to the other calendar for that day, because this is a limited calendars. Remember that free calendars are limited calendars, and they don't provide much of the information that we need. So let me just go for so what day it was, 1st of October. So October 1st. So right here, so major component was ISM manufacturing employment index. So that came worse than expected. Okay, so overall picture was worse than expected. Okay, hear me out. There's JOLTS job opening. It was way better than market had anticipated, which created a really messy overall view for the economy, because manufacturing, everything is deteriorating, and we had jobs perfect opening. So it was kind of a mess. So we just avoided we know that we're not gonna get a clear one-sided volatility that we were looking for. Now, with that being said, we had some commentary from Bostic Cook, if I'm not wrong, on that day. SNB chairman spoke, but I think she didn't make any commentary on monetary policy. With all due respect, I guess we were hoping, because this was the first comments coming out from a chairman after the Jordan. So we haven't had much, unfortunately. 7:15 p.m. PM. We had some comments from Fed Barkin Bostic Collins. I don't think so. He made some really nice comments out of the Fed speakers. Now, next day, I mean, I mean, this was the day when I thought like the market is going nowhere and it's just blustered. Okay, and only thing we're gonna talk about this day was ADP NFP employment change, automatic data processing, came better than expected, and the last was revised. So for those who don't know, ADP data has not really goes in line with the NFP. It's just the numbers, but I think with that the market was just looking something about the employment, because the Fed is so focused on labor market that any good number will make the dollar rally. So let me just show you what I mean by that. Let me bring that for that day. Okay, so this is the USD yen chart, and if you go 2nd of October, as you can see on TradingView, uh, we had uh, we had this data, and I think at this, and we had the move straight going here. Look at that, 220 pips out of that event. I mean, this has really surprised me that the market is so focused on labor data right now, that anything showing that we are having so good data, and the labor market is not falling off the cliff. It's just bizarre. I didn't know that this much move we can get out of the ADB, because it's not something that get attention every time. Okay, so nothing major. Had some commentary from Bowman Barkin. Maybe they listen. So here's the thing: we can see that there are Fed speakers scheduled for most of the days, but it doesn't matter. It doesn't have to be like they are making the comments on monetary policy. Sometimes they don't make any comments. Sometimes they don't even show up. So we had to move what we get. And if we go back yesterday, not yesterday, last week, and to be honest, I don't even know that if they had made any comments. So okay, October 2nd, and the Bowman. Let's go to my Excel sheet, and let me see. Okay, so he did made some comments, so pretty much inline comments with no further guidance. So he did not made any further guidance over there. So it's just nothing burger event we had. Fed member Barkin, if I go Barkin right here. So some comments are leaning towards hawkish, but overall it is pretty much balanced commentary. So why I said hawkish, the comments sees 225 basic this year as a reasonable path if the economy evolves as expected. and this was something that I personally felt that it's more hawkish, but it's pretty much in line. Nothing we can trade out of this. So with that being said, moving to Thursday. Thursday we had okay, let just go to the Forex Live, and Thursday, 3rd of October apply. No, 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 we are not there. Okay, now, so we had initial jobless claims 225 came above the expected. So if you
So in
don't know,
about 8
initial
minutes time
jobless
or so,
claims
we'll look
are
at the
the
potential
one
commentary from Fed's
when you
Kashkari.
when
Not expecting a
the
text release, but I do
people
believe there's
of
going to be a
United States of
Q&A at
America
the
are
event. I've heard from
unemployed,
Kashkari several
and they're
times
looking
since the
for some
FOMC report, where
relief
he
from
did
the
reveal
government,
he was in
then they
line
make
with the
claims
Fed medium
from the
forecast. We
government.
haven't
So
heard from him since
that
last week's NFP
called
report,
jobless
so
claims.
he does touch on market
So
positive
if
economy.
the
We'll be looking to
number
see
goes
how he explains
above
last week's
from
hot jobs
what the
reports.
market has anticipated, it's not good for the economy, because more and more people are dependent on the US economy. So if the number goes down, indicates that the economy is doing great and the labor market is healthy. So the number is slightly worse than expected, but not that much. uh, Moving forward, majorly to the ISM services price paid, it was a monster beat. I mean, 50 54.9, 51.7 was the consensus, and the 51.5 was the prior. We was so happy getting these numbers, but hear me out. But we had worst employment index, 48.1. So 50.2 was the prior. So as we know that the market is hugely focused, as so does the Fed, on the employment index, on the labor market. If we could had get a better 53, 52 numbers, I mean, we could have been in the trade, but unfortunately it is what it is. We stayed out patient, and we waited for the next opportunity. So with that, it was a nothing burger. Became nothing burger. I didn't want it, the nothing burger, but anyway. So Friday, October 4th. Well, we had NFP, and people. It was the day we made some buck, cause we had a really nice number coming out from US. NFP came 254K. Reasons came better. Average earnings up 0.4%, revised prior 0.5%, unemployment came down 4.1%. All of this data was great. I mean, great data. So average hour earning went up, which fueled in the inflation. If people start if the people start getting the raise in their income, which is inflationary. NFP, if we get the more jobs, it creates more growth, which is good for US economy. Unemployment rate down, which is good. More people are employed, economy will do great, and the Fed is highly focused on it. And with that, let me just show you this move we had. It was close to 224 pips out of the event, and I mean, it was great move. So I forgot that I was using my other screen. So this is what I was talking, the NFP, right? This one, I hope you can see that. Let me just this data, and it was a monster beat, as you can see. All over this section is green everywhere. So it was a pretty much great data we had. After that, we had some comments from Goolsby, and he was pretty happy by seeing these numbers. Numbers was pretty great. So that was the last week. Now let's move to the next week and see what we're gonna have. Monday, it is a pretty much nothing burger. We had some key thing I was paying attention to was the reserves from Swiss franc, and it is going up, which means that they are not currently intervening in the markets. We were expecting that they could have been, but I don't think so. They are doing now, which is if this goes up, that means we can see some weakness in the Swiss franc, but we're not we're not seeing that right now. Let me just to show you that. I just have the Swiss franc data somewhere here. Okay, go right here. All right here. So I mean, I'm pretty much disappointed from this trade. I was in the trade. I got into on 24th of September, and then we had some geopolitical tensions, and that made me to get out from this trade. I mean, look at the move we had. Okay, close to 200 pips. So the SNB is worried that with the strength of the Swiss franc, if I just bring it to the geometrical, so they are worried that the Swiss franc is really strong, which is not good for the GDP, and it is up. It is up, and it is up. 121 was the last mark, and now it is trading at 126, which is clearly getting favored because of the geopolitical tensions we are having right now. So anyway, the bank is worried, and the business lobby from the Switzerland is also worried because it's hurting their exports. Now moving back to the chart. Okay, so we do have some comments coming. I haven't heard anything from Bowman right now. Kashkari, maybe we can hear something from Kashkari, but we will see. We do have some FOMC members coming out. Okay, monetary policy meeting out of Australia. Um, nothing like it's lagging. Lacking data. We already had most of the information from Reserve Bank of Australia. So if they anything, if only this can create some surprise in the market, if we get some new information, otherwise it's still just gonna be a nothing burger. So as you can see on Tuesday, let me just make it nice here. Okay, so Tuesday, yeah, it's good now. So we can see from dollar side, we're gonna have some members out of coming US, Bostic. We're having Colin Jefferson, and the major event at 10 p.m. Atlantic Standard Time is gonna be official cash rate. So if we talk about what they're gonna do, the market is currently pricing in 50 basis point of cut, as you can see over here. And the nature of this bank is to go as a front loading. Okay, so the first they increased by 25 basis point cut, then this went for 50, then they went for 50, 50, 50, and they made their moves by 50 basis point cuts. Look at this. So okay, I have to move it quick because my laptop's battery is dying. Okay, how much is it? 17%. Okay, so let's move this and wrap up the video quicker than I thought. I thought that we're gonna talk for a while, but unfortunately we can't. So 50 basis point call. So the key thing I'm looking for is, do they gonna make 50 basis point call? If they don't, if they go for 25 and if the stayed hawk, if they tend to be hawkish, last time they weren't. So if they went hawkish this time, uh that can be create some upside momentum in the kiwi, uh, but that is highly unlikely, high unlikely. Okay, so you got it, I assume. We on Wednesday, Bostic, Logan. We are having plenty of Fed speakers this week, and I'm keen to hear that what they have to say about the labor market. So that's something I'm keen to hear. What did they change their view? Some of them penciled in for more cuts next year, and some of them were dovish. And I want to see what they have to say about the labor market. From some meeting minutes, as I said, it's not gonna be surprising because we already heard so much from the Fed. The for my okay, so what is his name? I let me just go to there. Timiros, yeah, Fed whisperer. So a very solid September payroll report probably takes a lot of the drama out of the November Fed meeting and likely leaves officials on a course of a 25 basis point cuts. So Fed whisperer is just gave the market an idea that the Fed gonna go 25 basis point cuts, and I wonder what these Fed speakers have to say on that day. Okay, so CPI, guys, I mean, this one tend to have a lot of weight last year and the last year, but now as the shift has been focused on labor market more, only a beat I'm looking to trade. A mess would create a nothing burger, because it's just make no sense, because if the inflation start heading to deflation or just reach at 2%, and I think it's gonna get tricky. So a beat over this inflation figure can give us a clear edge volatility. So after that we have some Fed speakers again, and on the Friday we had GDP. So GDP month on month can't. I'm not look. I don't look exactly at the month on month. I'm more focused on year of year. So month on month we will see how much we get, but year of year, as I said, let's just get on this week, and let's see if we can get year of year from here. Okay, GDP month of month is here. No, we are not getting year of year from here too. So guys, my battery is getting drained real quick. 11%. Oh god. Okay. So nothing special on Friday. PPI and core PPI. I mean, I'm not keen to trade this event because it's coming after the CPI report. So it's not gonna. I don't think so. It can create any worth of trade. If we look at the jobs data we're gonna get on from Canadian side. Uh, Unemployment rate are expected to tick up, and employment change can can go up or down. We will see. However, I personally believe that the bank has been really aggressive in